Welcome back to our Lunch and Learn series. Today we will hear from Edward Stringham on his new book, Private Governance, Creating Order in Economic and Social Life. Edward is the Davis Professor of Economic Organization and Innovation at Trinity College in Connecticut. He is president of the Society for the Development of Austrian Economics, and the inspiration for this book came when he was a visiting professor at Klagenfurt University in Austria. Edward is the former president of the Association of Private Enterprise Education, the editor of the Journal of Private Enterprise, editor of 2 books, and the author of more than 60 journal articles, book chapters, and policy studies. He's also a contributor to the current edition of our magazine, Financial History. Following his talk, we're going to be selling his book, and he'd be happy to sign a copy for you. I'll now turn the program over to Edward Stringham.
Thanks so much, everybody, for coming. Really appreciate it. It's nice to see you all. I'm going to be talking a little bit about the history, the evolution of financial markets, and go through some case studies of financial markets in the world. The first one was in Amsterdam in the 17th century, and then we'll talk about London, and then New York, and then some modern markets today. So from an economic perspective, financial markets are a good thing. They channel money from savers, investors to companies, and that lets everybody engage in commerce. But the question that a lot of people wonder about is what happens if things go wrong? What happens if somebody defrauds the investor? There's always a problem of intentional fraud or the problem of unintentional counterparty default. So I've got a video from the 1957, basically called The Stock Market Explained, which is...
Before you invest, investigate.
Yeah, invest. Just think, with $60 a month, I could... Just a moment, sir, if you please. You look like the kind of a man of judgment who knows how to invest his money wisely. Won't you step into my office, please? Let me give you a hot tip, strictly confidential. For a limited time only, we are offering to discriminating buyers like yourself a few shares in a world-famous company with mines in Nigeria, Tasmania, Somaliland, and Brooklyn. It's Utopium Unlimited. It glows in the dark. Small investment, big profit. As a special favor, I'll let you have 100 shares for only 40 cents a share. That comes to $40. Plus, of course, $20 for putting you onto a surefire moneymaker. You are now a man of substance. Hey, you!
Mr. Finchley, there is a big difference between dealing with a fly-by-night operator and a reputable broker.
So this is an example. My friend is from Brooklyn, and obviously you don't want to buy stocks from him because there's just too many things that could go wrong in cases like that. So how do you prevent basically these fly-by-nights, these fraudsters from basically destroying markets by promising everything and delivering nothing? Well, there's kind of a widespread consensus by many academics, not every academic, and also among policymakers that you need law. You need government rules and regulations to protect markets. So here's an economist. He says, transaction and capital markets require impartial third-party enforcement. NYU law professor Epstein says, law becomes critical for voluntary transactions to take place. My professor, Gordon Tullock, he says, transactions which have large payments in the future, credit transactions, require third-party enforcement. So that's the idea, is if you don't have regulation, if you don't have people looking over market participants, things are going to spiral out of control. And then you have a lot of this sentiment, even more popular among certain politicians, where it's kind of an us versus them, where you want to go after the banks because they think they're going to defraud us. So she says we need to fight back against a financial system that broke the economy. She says, I got good news for them, bring it on. We also have a lot of depictions like this in popular magazines. So the Rolling Stone magazine has lots of these types of pictures where they're portraying banking and Wall Street specifically as inherently fraudulent. So here's the big pigs on Wall Street stealing from John Q. Public. They're rigging the system. They're pulling the strings. Here's one where they are turning rats into AAA grade hamburger meat. So this is kind of a negative position that you often see. And then there's certain people who take it to the extreme where they want to jail bankers and things like that. So this has been happening more and more recently. This is a gentleman who got convicted for what wasn't insider trading when he was originally doing it, but then they expanded the laws and then he got in trouble. In addition to this sentiment, we see lots of new people adding regulations to the world. These are the increases in the Federal Code of Regulations. If you're ever wanting to get to sleep very quickly, this is a great way to do it. It's only, I think, 150,000 pages. That has potential consequences for the economy. You have too much regulation, you can have banks are unable to make loans. Banks are unable to help firms raise money. In the United States, I want to just show you this brief graph over here. Basically, the main black line shows the number of publicly traded companies in the United States is half what it used to be from the 1970s. So our economy is 3 times bigger, and we have half the number of publicly traded firms in the United States. So a lot of those firms are listing in other countries. Those other lines going up are for other countries. So the American financial markets, many people say, are hobbled by excessive regulation. And this is a chart which just shows the number of IPOs over the past 15 years has really plummeted because a lot of firms think it's too difficult to list in the United States. All right, so this is kind of a popular position in today's world, but it turns out this type of a view has had a long history. In Amsterdam, the first stock market, I was in the museum and I was looking at these plates, and who here speaks 17th century Dutch? Besides Michael. All right, the polymath over here. There are these plates where they show these people playing badminton and different things, and it says actionisten, and basically it says away with dandy speculators, and squeeze the speculators tight, down with the speculators, away with actions and speculators. So if you really want to be Occupy Wall Street, you need to get these porcelain plates that are against financial markets from the 17th century. You can look at this in the popular press as well, 17th century Amsterdam, portraying all types of fraud as they viewed it. They viewed stock markets as forms of gambling. They thought that markets were used to manipulate prices, to artificially change the prices of shares. These are very detailed, complicated things, portraying stock markets as games, as fraudulent. Here's a picture from 18th century England about markets being terrible. And we can see that in the United States as well. These are from about 100 years ago. There's Morgan and Gould and all these people. Jack against the Wall Street giants. Here's J.P. Morgan on the left, creating bubbles, and the public is losing against him. Here's Gould, who's wreaking havoc on Wall Street. So we have this kind of old, long view throughout history, flim-flam finance from Wall Street. And so in each of these markets, government looked at the market as kind of fraudulent form of gambling. And the fascinating response at the time, they pretty much said, all these transactions that you're doing are very sophisticated, are going to be illegal. So they wouldn't enforce most of the contracts that they were doing, like forward contracts, short sales, option contracts, which are very sophisticated financial contracts. They said those are illegal. we're not going to enforce them, and we are going to say this is bad. Now, the interesting thing is, even though they said these transactions were illegal in each of these markets, they didn't punish people who did them. So imagine being able to do something that's against the law but not get in trouble. It's just not enforceable in courts of law.